Good afternoon and welcome to BizTech's Asian Midday Market Watch. Kelvin Wong, Senior Market Analyst at Oanda, is our guest today, this 17th of May. Kelvin, it's always great to have you on the show.
Hey, my pleasure, Brian. Good to see you again, and very good morning.
Yeah, so Kelvin, today we focus on Singapore. Singapore's export numbers have come out and they are weaker than expected. Tell us about this and what will be the impact on the Sing dollar as well as the local stock market in Singapore.
Yeah, sure, Brian. So the Singapore Nordex, we call it the in short form of the non-oil domestic export, actually fell year on year negative 9.8% for the month of April. So this is actually the seventh consecutive month of contraction. So the reason for this lackluster number was actually due to a very lackluster uh, domestic growth story up from China itself. And do not forget, Singapore is being one of the key trading partners of China. So what we could see over here in China is that if the growth of China continue to actually decline, I would say that contract, there's a high risk that Singapore Nordex number will actually show another month of contraction for the month of May.
And so, how is this going to impact us as investors?
Yeah, so we got to be mindful over here is that especially Singapore itself, we are actually a small open economy. That means we pretty much primarily rely on export to drive our economic growth. And very interestingly, if you look at the start of this year to date, the year to date performance of the STI is actually underperforming the rest of the region. If you look at the benchmark, kind of a MSCI Asia ex Pacific Japan, ex Japan benchmark, if you compare that, the Singapore STI is down close to negative 2% year to date, whereas the Asia ex Japan benchmark is actually showing a bit of positiveness at plus 0.6 point. Pardon me, is at plus 0.6%. So if we continue to see this persistence, we call it weak domestic demand coming out from China, which could actually have this negative feedback loop spillover effect to the local STI market.
Now, how is that then looking ahead going to impact equities in the SGX? Because obviously, Singapore being, as you said, a open trading economy, a lot of dependency is on China.
Yes, precisely. So, if this trend were to actually persist, potentially we could start to see further bearish bias on the STI. So, in fact, right now the STI is trying to actually attempting to actually kind of it's actually attempting to try to test a key support level around the 200-day moving average. So, if we start to see a clear break below this level, potentially we could actually see further downside on the STI, in the coming months ahead.
Now, Calvin, before we leave, what are some of the key risks that you're seeing now in markets, and what are your thoughts in terms of key things to watch out for in the next couple of days?
Yeah, definitely, Brian. So one of the key events that we should be looking at will be this U.S. stock market. Why? Because right now, you know that there's actually a risk in the U.S., major risk in the U.S., which is this ongoing U.S. debt ceiling, I would say squabbles between the Democrats, which is Biden's administration, and the House, which is controlled by the Republic. So Janet Yellen, which is the U.S. Treasury Secretary, in the last 2 weeks, I believe that she has won 3 times. Stated that if the U.S. debt ceiling is not being extended by 1st of June, technically U.S. will not be able to actually pay its bills on time. That means, i.e., we could potentially see a sovereign credit outlook or credit ratings downgrade by credit ratings firm on the U.S. sovereign debt. But if we look at into this situation right now, it's not being really priced into the U.S. Equity market, especially those stocks that are heavily long duration growth stocks that are very heavily concentrated on the tech space. If you look at the Nasdaq 100, so the Nasdaq 100 yesterday actually managed to actually close flat. Yes, but it actually came down a fair bit of the intraday gain of 0.6%. But it seems to be that market is totally ignoring this debt ceiling risk, especially on those long duration growth technology stocks that has yet to actually price in such risk at this juncture.
Now, Calvin, as always, thank you very much for your insights. Thanks for coming on the show.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, Senior Market Analyst at Oanda on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out BizTech's interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.